With global stocks crashing and the yen rising against 13 of the 16 major currencies in the past week, the world just became cheaper for Japan's cash-rich companies. But might the country's central bank be becoming restless? I'm Monica Gibson, and Esther Reichelt joins me down the line to discuss. Esther, after 6 days of decline, Japanese stocks staged the biggest rally since October. It really is a roller coaster out there for investors at the moment, isn't it?
Yes, absolutely. And of course, for the yen, it's important that the yen is still a safe haven currency. We could see that very nicely in the terminals connected to the Chinese stock market crash. So right now the uncertainty is high how the other central banks will react to that, and I think it will remain high for some weeks to come, as it first has to prove that the measures taken by the PBOC are indeed valid or indeed work to stabilize the market.
Speculation has been rising that the Bank of Japan will need to act, but with China's seemingly bottomless arsenal, is it wise for Japan to try and keep up? What do you make of the suggestion that Abenomics Round 3 is looming?
Well, I think all central banks have basically a bottomless arsenal of things that they could do if the pain is just strong enough, right? Is definitely a chance for further expansionary measures from the side of the Bank of Japan. So it's not about keeping up with the People's Bank of China necessarily, but to achieve the internal targets within Japan. So just with a focus on Japan, there is, in my opinion, still the chance for further easing of the BOJ, yes.
As you mentioned, Abe admitted oil prices may hinder reaching his 2% inflation target. To some, the main cause of the negative GDP growth in Q2 was weak consumption, as consumers have not yet recovered completely after the consumption tax hike. On Friday, we have CPI and retail sales, but could there be another miss?
Well, yes, the data recently just didn't look very good, like the data coming out of Japan. I think in particular retail sales still could continue to be weak, and if you get a very strong number, we know that indeed this negative effect in the second quarter was just due to the delayed bonus payments. But this is not yet the totally convincing explanation. So we need to see what's coming up, and in particular with respect to CPI inflation, we still haven't seen the big turnaround. And due to our analysis, the trend in inflation is still going downwards. So we don't see really positive data at any front.
Indeed, analysts say the yen is stronger in an Abe-unfriendly way. So what are the levels to consider in terms of yen moving forward?
Well, we still think that the BOJ is determined to achieve its target. So we still think that they will not accept a substantially stronger yen. So, however, the levels we are at now, and it's due to safe haven flows, they are down. I don't think that there will be too much concern about that. However, if you drift below this 115 on a sustainable basis, particularly the 110, so the levels we've seen before the expansion of monetary policy in October, that is definitely something they will not like, and they might tackle. The question is whether they do that verbally in the beginning or later also with further measures. On the upside, there is still holding this Kuroda line, how it was labeled by some analysts, the 125. If we are achieved to break that on a sustainable basis, this will definitely help the BOJ and will weaken the necessity for further monetary policy easing. However, we do not see that right now because the sentiment is just going to the other direction.
Esther, great to speak with you. Thank you. Well, that's all from me for the moment, but Sam Meredith will be back with today's forecast, so please do keep clicking back. Goodbye.